All right, everybody should be able to hear me. No problem, Jim. Hopefully you can stay a little while. Just to make sure, are you guys hearing me? Give me a quick yes or something, let me know. Awesome. Great. All right, guys. Let's go ahead and get started. Welcome to the Hurley Investments Trade Findings and Adjustments of August 10th, 2021. Kind of just going to be following up with a few of the thoughts we've put out there recently, and just going to answer questions and see what other thoughts we can come up with tonight. This is what I had on from end of July. Last time I was joining you guys, I had mentioned not putting on trades back then as we were still waiting for earnings to come in, and some of the earnings that went really well. Earnings that went really well, just like Apple, just seemed to kind of crap out, as well as Facebook, for silly, if not no reason whatsoever. That's all I was going over here. It's kind of funny to see Amazon lowered its guidance and fell after earnings. Apple raised its guidance, or at least they gave really good guidance, amazing numbers once again, and just kind of petered out and fell. This was earnings day. Kind of see the reaction there. Bouncing a little bit, but just kind of annoyingly staying in a range and not taking off. Facebook was very similar, as I mentioned. So my thought back at the end of July was, let's just let the market breathe, as it's just going to be an irrational. But this week has been kind of cool. Yesterday, slight down day in the market, and we were up, which is always fun. I mean, it was very slight. Today it was up a little bit, and we were up as well. Just a few things working our way. So you always take those days with some gratitude. Like to comment back again with First Solar maybe in a little bit. We'll come back to that, I think. Not sure how many of you guys were here yesterday, but I did like what some main points that Kevin had brought up. This is My Hurley Investment, our little blog site. I'm sure you guys know about it. In case you don't, it's just myhurleyinvestment.com, where we post the recorded videos as well as all of this stuff we write on Microsoft Word and whatnot, and we just post it here. So this was his talk about it yesterday. Why, with so much risk in the market, are things still going up? Why are things still going up? Really good points. You asked 20 experts, what's the most important sector? U.S. economy, technology, financials, transportation, energy. Went over. Energy crashes typically happen as a secondary with other parts of the economy. But here's the main point that I really wanted to highlight. and this is quoting Kevin, I believe we have a government-induced monetary crisis, which means too much money, too much free money in a COVID world with no place better than the US stock market to put your money into. A monetary crisis means we should expect the opposite of what normal market indicators are telling us. Or in other words, the money covers up the real problem. And then he acknowledges in this cash-rich environment, we could see the Dow continue up 5 years down the road. S&P up to 10,000 5 years down the road. So kind of interesting, relevant points. That again goes along with everything we're talking about with our tech industry and tech stocks and Apple and Facebook, as we mentioned. So much money has already gone there. So it's difficult for people, for investors to continue to pilot there when we already know that everyone owns so much of it. And even still, we're not going to complain about this awesome run up to almost 150 from 123. That was a huge pre-earnings run. Thought it might stop at a couple places right here at 134, and it had a little blip for a day or two and then just kept heading up. And right now still just have earnings protection on for Apple. Some of you have a Facebook, not all of you, but it kind of looks so similar. Check out this reaction. Comes down after earnings and then has just kind of tried to fight back a little bit, but not very aggressively. I just want to take a look at Amazon just for fun. It always it gives me a little smile and gives me a little giggle to see Amazon struggle in the stock market. I stupidly subscribe to Amazon Prime because I'm a sucker like everybody else. Consumer, I kind of like it. As an investor, I hope you've been around enough to know that it's so frustrating to see so much money in one company that doesn't deserve it on an earnings, on real fundamental valuation. So kind of fun for me. Talked about tech stocks. Recently, we had Under Armour, which was really cool. Just taking a look at this, they had a kind of a pre-earnings run, and then earnings looked amazing. Great article here. I'll link this one to the bottom. Basically says that there could be a 40% upside. Well, obviously you see it here in the headline, implying a huge 40% upside from free cash flow. So their free cash flow continues to gain. More money to invest in their own businesses, more money to advertise, more profits, and so on. I'm just going to link that. And that way, have it. You make it look pretty. Let's see. Free cash flow has been increasing. And could put Under Armour up to the 40. I'll do a little squiggly line, $40 per share. And it's trading at 25-ish right now. So another reason I'm mentioning Under Armour, I thought of this as maybe a trade to follow. My worry though is it's made such a huge run up already. My worry is that there will be some profits taken somewhere around here. If it can't get above 26 tomorrow or later this week, I'm probably looking at adding protection for shares and just trying to protect some profit, really is all I'm thinking about. But certainly in the long term, this one looks really awesome. I'll say short term. I'm worried there might be some profit taking that we will need to protect. This is not giving me my little list thing. Annoying. So long-term continues to look great. Let's see. Just gonna put you guys on pause just for a minute. I need to get E-Trade up. That way I can kind of show you what things are happening with Under Armour, what we've done, and maybe a few others. More trying to get with, give you guys some updates, I guess, on what has been going on. Let's see. Seeing a question come in. Give me just a minute. Bill says, good job on Disney also. Thanks, Bill. And thanks for mentioning Disney. We'll take a look at that as well. But I just wanted to show how performance-wise Under Armour is working out. Year to date, not so great. But how many shares have we added over the course of the year? There has been quite a bit, and finally getting it turning around is really cool. Let's see, do a new tab and then stock charts. Want to go further out so we can see the beginning of the year. Do 6 months. This should be good. Nine months. There we go. Certainly up, but this whole sideways period, and not just sideways, just kind of somewhat volatile sideways moving stuff, allowed us on some portions, like here, let me get my pen out, these drops, portions of these, we'll leave this part, just some of these we're able to catch and add some shares, but much of this here through these flat spots tends to kind of whip us out of profits with our protection at times, which of course is frustrating to say the least. But always on the positive side is if we can add shares, we can have growth that continues on far into the future that we wouldn't have otherwise had, of course. Bill, since you mentioned Disney, let's just take a look. And Disney has been kind of a pain. Sideways. Just along here, I think we were able to at least mitigate some losses. This support level was broken, came down and back up. I think we might have made a bit here, but all of this was kind of crap, to be honest. This was kind of crap. Oops, let's see. Get my pen, erase my drawings. But let's check out what we've got going on Disney right now. So today we had, what were there? 185 puts on Disney that were making about $4 up on the way down, $4 or $5, pretty close. And what we have, of course, is earnings on Thursday for Disney. So going back to the chart, let me get a little closer. we had it 185, pretty much right at this little top here, and it had come down, swung around, and just decided, hey, we're closer to earnings now, let's just roll those down to the next available strike, and kept them in the same expiration. Just allowed us to book a little profit and get out the money, thinking that we'll have a good chance that Disney will do well on earnings. And certainly if we see some more subscribers, this is going to be key. They've done well for earnings all year, added subscribers, and they've fallen off earnings as the growth rate in subscribers on their Disney Plus has kind of slowed down a bit, but still amazing. So sort of frustrating to see those earnings have gone the way they've gone, and really not seeing the benefit that Disney is offering, and the money they're making and the job they're doing, at least in terms of how it's performed in stock price. But it was nice to book a little profit on puts, get us set for earnings Thursday, and yeah, maybe we'll talk about it Thursday morning, although I assume they let's see, I'm pretty sure they announce after market close, which is true. So maybe we won't talk much about it because we won't know much. So maybe that'll be a Monday thing Kevin will go over. But I would really love to see this one kick butt and start heading up. Just doesn't make a whole lot of sense that it's not receiving any market love. So what do I want to say with Disney? Just a little update. Looking at small profit on 185 puts and rolled down protection to 177.50. All set for earnings Thursday. And you know what else is Thursday? Who can tell me what else is happening Thursday? I'll give you a hint. Starts with a B. And you were talking about the put trades today, Bill. I gotcha. And really all that is, sorry, just to kind of go back, we don't always roll protection down, but when it just seems like a stock has been unnecessarily beat up, the protection gives us some profit, or if the booking the profit on protection gives us some profit that goes against new puts closer to the money, that makes us lose a little less money as it goes back up. So I guess all it is a positive expectation on earnings. Thanks, Jim. BIDU earnings as well. This one, you've heard me complain about quite a bit. BIDU is just getting dragged down with all of the stupid Chinese regulations and crackdowns on some of their techs. Even though none of it has anything to do directly with BIDU, it's just kind of gotten pulled down. What do I want to say about BIDU? So I guess the latest update news-wise is the Kathy Wood lady that runs the ARK Invest, whatever it's called, ARK ETF. Had invested heavily and stuck in all these Chinese tech stocks. At the beginning of the year. And then recently sold out. And her reasoning, not all of them, I'm sure she didn't sell everything, but her reasoning was basically kind of partly because of the regulations. She thought that she basically thought that the way that the Chinese government is acting is disincentivizing to these tech companies. I'll say the CCCP, Chinese Communist Party. I'll say regulations are disincentivizing. Oh man, thought I had that one. C-E-N-T, dang it. Disincentivizing to large tech firms. She said something of that nature. Maybe I'll follow up better with better quotes next Thursday when I take a swing at this again. Problem is, or I guess the problem with her reasoning is all these companies I'll say Chinese tech, including, I'll say most importantly, are extremely undervalued. So I think she's worried that kind of what has already happened, which is that investors are pulling out of investing in these companies because of worry on regulation, but also internally, these companies, the freedom they've had to pull in investments from abroad and do business outside of China is being disincentivized, or the regulations are disincentivizing to those. My thought, though, is because they're so undervalued, there's huge opportunity. And you guys know I've mentioned this, Kevin's mentioned this as well. BIDU also has the benefit of being heavily owned by these guys right there. Government insiders, and it's kind of ironic that a bunch of communists are heavily invested into a company that is engaging in capitalist market, and they're creating for themselves their own little monopoly. So that brings me to my other point. BIDU can do just fine with what they do internally, or I should say domestically, with all the billions of Chinese people using BIDU and their services. I don't see it as a huge problem that regulation will disincentivize outside investment and disincentivize a BIDU from trying to make money, because they do so well domestically. That's pretty much it. Any questions, thoughts to add there? Again, I'll try and follow up with a little bit better quotes and stuff on Thursday that will make things click a little better there. It's really bothering me that there we go. Our bullet points are all messed up. But I'm waiting for you guys to ask questions while I'm messing around with my LCD issues. Those are some thoughts on BIDU that I'll need to follow up with. Make sure you guys join if you can Thursday morning, 10 Mountain Time. Just wanted to check a couple others, and really that's kind of it. Just wanted to go over a couple little updates and what we've been looking at. Boeing, we had protected through some of this downward movement. We pulled protection off. just double check kind of where we're at with Boeing. Here's our shares, 2,100 shares, bunch of calls. Looking at Boeing, seeing if it can break this 50-day. They did great on earnings, had their profit, which wasn't really expected. Only reason I can see that we'd have issues with a Boeing going down is just this more issues with the Delta variant COVID, causing issues with travel once again. Not much else to say there. Guys, is there anything else you wanted me to just look at, go over? Talking about First Solar. Gave lower than expected guidance on their earnings. And mentioned the long-term play is the infrastructure package, right? Just going to delete that, but I wanted to check out our First Solar, how that little trade has gone. After this initial drop, found a little bottom here and has done really well last 2.5, a little over 2 weeks. Let me just take a look at that. So these are looking good. We talked about 95, 105, leap bull call spread. We talked about a bull call calendar spread that I had suggested. I don't know if any of you have put that on, but you should be looking pretty good. And see if either you get called away or we can get some credit on December. Just as a reminder, it was like 95, and then the short call was at 105, I think, expiring this December, and the 95 long was this one right here, out to January 23. So bull call calendar spread. You can go back and look at that one, but if you've got that, it should be looking good. And let's ride the wave of the infrastructure package. All right, last call for any questions. That's all I've got for you tonight. Again, please, if you can make it, join me Thursday morning. And we'll go from there. Yep, no problem, Jim. All right, guys, thanks so much. You take care. Have a good couple days. We'll see you Thursday. Have a wonderful Tuesday night. Goodbye.